Hello and good day to you all. This is Christian Ball calling you from GFT in London. I'd like to welcome you all to this webinar on the topic of open banking. The title, Are You Ready? The format for this session will be to run through some slides, information. I know that my colleagues are waiting to get your written questions, and obviously they'll be sharing those with me, and I'll answer them as we can. I think ideally, if you really want to ask questions at a specific point, please do so, or otherwise I'll try and take them towards the end of the presentation. So without any more delay, thank you again for joining, and we'll start the presentation. So my name, as I said, is Christian Ball. I head up the Retail Financial Services group here in UK and Ireland. My role, obviously, is working with a range of retail, private wealth, small, medium enterprise, and insurers in this market across a range of different programs. Navigating the slides. I think most of you probably know who GFT are, but primarily as an organization, we provide a mix of nearshore and onshore resources for our clients. We are a very practitioner-led organization, and what I mean by that is we provide experienced people who have the relevant knowledge and previous track record in given areas to our clients. We are an agile organization in the sense that we provide small groups and teams to provide execution capacity and thought leadership, and we run programs from initial ideation and design thinking through business case development and delivery and run of solutions for our clients. So that's enough about the advertising. Now for why you're here. So, open banking, what is happening? It's an interesting topic, and the first thing to kind of acknowledge is that we should see open banking as a topic in two ways. The first is that there's obviously, in some markets, regulatory drivers already in place for the opening up of consumer data through APIs. Now in the UK, that is started through government regulation, and we also have the upcoming European legislation, which is slightly broader and will open up customer data across a range of products. Specifically, the APIs are focused in on two main features. One is being able to, as a consumer, provide third parties with your account details to facilitate payments. The second is to provide a range of data transfer capabilities, in particular transaction information from existing accounts to third parties. Now, I know in talking to colleagues like Leo in the office in Brazil earlier, that one of the areas of great interest is understanding the liabilities side of messaging, and we'll touch on that a bit more later. But I think as a general rule, the process in Europe has been for those third parties who wish to access these regulated APIs, that they have to go through essentially an onboarding process. In the UK, that's called a whitelist. They have to go through two government agencies for authorizations, and they are looking for the right levels of security, compliance, etc., before a third party will be granted access to the APIs themselves. In terms of liability, this is an interesting question, and I suspect clarity will only be finally reached when, as is probably inevitable, at some point in the future, a third-party consumer of a bank's API has a data breach. Right now, the liabilities clearly fall between the bank on the one hand in terms of the secure access to the information and the secure usage of that information on behalf of the third party. But it will be an interesting to see how that shakes out. But that's the principle of liability at this stage. So banks' liabilities are going to end at the point where the data has been successfully shared without interception to a third party by virtue of its secure API standards, which are, of course, mandated as standards. Now, what's happened in the European market around open banking, and actually further afield as we look at the US and in other markets as well, is that the drive for open banking has been fundamentally one which is looking to open up customer data so that customers have more access to and are able to share their information more easily than has before been the case. You can't see me on this webinar, but I'm older than I look, and certainly these debates about information sharing and where does the ownership of data reside have shifted significantly over the past few years from banks' view that the data that they hold on customers' transactions is theirs to governments essentially saying, well, actually, the data about a customer's transactions, they have rights to that data as well because it is their transaction histories. This is obviously a very important shift, and the main underpinning driver, which we shouldn't lose sight of, certainly in the regulatory sphere at least, has been to drive these APIs out as a means to improving the amount of choice and to improve competition. So while many banks, I have to say, have still looked at the API introduction in the first instance as a regulatory compliance initiative, in fact, the government agencies behind these open APIs do not see them as so much as regulatory compliance as a competitive regulation. So it's a slightly new way of using regulation to drive real change and trying to open up market and also trying to open up client engagement. I'd also say that when we consider open banking, what's also happening is that outside of the regulatory compliance, it is very obvious that the notion of exposing bank services through secure APIs to third parties, the consumption of API of data through APIs from third parties into the banking environment is very much here to stay. And that's having a knock-on effect, which we're going to talk about, in terms of business model thinking and readiness for organizations themselves to be ready for what will essentially be a much more open environment in which financial services will be offered and consumed, with some significant opportunities as well as some threats to existing banking models. I think a main theme for me, and it's very clear from the conversations I have with the heads of open banking across many banks, is that one of the things that open banking is doing is driving greater in-house innovation and in truth a more entrepreneurial spirit on the part of financial services. Now, banks have historically been very good at managing innovation, but within a reasonably narrow confines of the products that they sell. The explosion in fintechs globally has reminded us that innovation could be greater, and I think it would be fair to say that financial services has not necessarily been at the forefront until more recently in terms of being truly innovative. innovative. The open banking environment is driving greater amounts of innovation, both in terms of the customer experience, the services, etc. And I will touch on some of the examples that we're seeing that open banking in general is driving. So in summary, open banking within the European context is regulatory. However, already we are starting to see increasing amounts of activity preparing organizations for the wider implications of open banking, both in terms of business models and opportunities, and in terms of the range of relationships that financial services organizations will have. When we look at some of the, I should call them poster child examples of organizations that are really doing a lot around open banking and being prepared. The one that always comes up, certainly from my experience, is BBVA within the European context. Why? Two really good reasons, in truth. The first is that actually BBVA has done a really good job of both positioning itself and leading from the top in terms of embracing technology change and making it a mission statement for the bank as a whole. I think we're probably all aware that decent senior sponsorship is a critical success factor for large complex organizations, and banking is no different from any other. I think the other really important point is that BBVA very early on focused very much on using APIs to try and drive efficiencies inside its own bank. So a long time ago now, right to where we are today, BBVA started an API wrapping program, which initially was looking at driving data from mainframes to offload that data to drive more efficiency, greater accessibility, real-time capabilities. And that's progressed to providing a full stack API environment for the whole organization. More recently, what we see as a result of that is that BBVA is able to reasonably rapidly drive out some new innovative capabilities. You may or may not be aware of the Valora app that they developed, and you may or not be aware of the financial advisory applications they've developed, both of which have been extremely well received in the market. And I think the Valora app, which is essentially an application helping consumers in the process of how to buy a house, is particularly interesting because it also talks to the new business models and engagement models that we are seeing for banks, where your relationship with your customer does not start at the point where they approach you for one of your products, but actually it's about deepening your relationship earlier in the client's, the customer's decision-making process. So how to buy a house is an application that's available to anybody, whether they're BBVA customers or not. And yes, it delivers you at the end of the process potentially to consume a bank product, but not necessarily the case. And I think that's an interesting departure where we have financial service organizations opening themselves up to the notion that they are more important in the customer's kind of financial health than just at the point where the customer is asking for something from the bank. I think it's also worth noting that on a different business value, recent research on open banking and open banking transactions has suggested that where banks are able to see a reasonably detailed transaction history from customers, that's going to have a significant uplift in terms of the credit market, primarily because the accuracy and therefore the risk pricing associated with lending products will itself become a sharper tool for banks. So banks will be able to make greater lending with a stronger kind of risk assessment, because they are going to be able to see a consumer's financial history and be able to score that financial history much more appropriately around affordability and therefore risk and therefore price. So there's just a couple of examples of things we're seeing already in the market, which are essentially precursors of a much greater amount of open banking engagement in the future. So there are different models that we're seeing in the market that are emerging, and I think it's important to touch on this before we dive into readiness discussion points, of which there are many. A traditional bank on the left of the screen, as you can see, we have evolved our financial services relationships in a very secure and linear way. The customer essentially is engaging with us in a closed environment through our own mobile, our own web, our own branch networks, our own advisors, etc. Some exceptions may be in brokers and mortgage brokers and financial advisors, but that's pretty the only departure. Through an internal API at best, maybe not even a full API stack, into the core banking solutions. As we see banks evolving and embracing more of the open banking environment, we're seeing in the first stage having open APIs. That's allowing banks to embrace, integrate with, and consume information from third parties. So what's important here is thinking about, for example, engaging with house buying websites to provide a richer service and experience for a customer. Thinking about how you could help a customer buy a house by having integration between the properties they're looking at and the information you need to get that decision in principle and to get that mortgage written, or even a lending process for automotive loan or white goods lending. So we're seeing those models today. We're also seeing, even at this early stage of open banking, models which look at replacing or changing the engagement model around financial services for things like credit cards. So in some markets, for example, the US, credit cards are still very, very profitable, and I know they're very popular also in Brazil and Latin America. In places like Europe, the cost of and the margins, the profitability of cards is under serious pressure, both from the ability to transfer credit balances for interest-free rates and all those sorts of unique ways of poaching others' customers, but also changes around capital adequacy rules, which means that financial service organizations now need to make greater provision for the credit lines they're granting, not just the credit lines that are being consumed by consumers, but the full. So, for example, if I have a $10,000 credit line with my bank, but I only spend only $1,000 a month, and I clear that down, the bank has to make provision for the full 10,000. There's also significant pressure on interbank charging fees and credit process fees through newer entrants. So what does that mean? So by using Open API and having transaction data available for customers to share, we're seeing point of sale models evolving where consumers can enter merchant environments and with their ability to transfer information, get real-time credit agreements on white goods, automotive, etc. So the credit card market is now also being disintermediated through a contactless payments engagement model using the mobile app of the financial service organization with the right knowledge and information. What we're also seeing, and this is also very interesting for us all, I think, is that those providers, there's a company in Europe called Divido, that's Divido, which I think is definitely worth a look if you're not already familiar with it. Not only do they provide the infrastructure to integrate to those point of sale and to be able to consume that transaction data to help facilitate for the bank a real-time credit decision for goods, they've also generating a marketplace so that as a bank you can work with Divido, you can use their service for your own merchant network and end the relationship there. Or you can also work with Divido and essentially bid for the lending for all of the merchant relationships Divido have themselves. So Divido publicly, and I know they have many more than they've announced publicly at the moment, but publicly they already have relationships with the like of BMW and Dell Computers. So as a bank interested in growing its lending book, using the Open API environment, you're able to go after the lending book of Dell Computers or BMW in a way that was previously very difficult to do without tied affinity type relationships. So second model, and that's a model, and that's really with us already to a lesser or greater extent. The next model is around more what we call modular banking. Now, where that's a little bit different is the main player here is the bank providing elements of its service to be consumed potentially by others. So you can start to integrate with those ecosystems, provide blended services where your content and the content and capabilities of other providers are blended together, so the customer gets an enriched experience across the piece. If you're not familiar with, there's a company called Xero. That's Xero. They started life as an online small medium enterprise accounting system. They now have over 600 marketplace relationships, everything from additional financial service capabilities around accounting to cash flow, financial management, and a whole series of other small enterprise functions. So we're seeing that blending, if you will, and forgive the phrase if you're not familiar with it, but I heard this the other day, and I think it explains it well. We're seeing a move more towards what we'd call a mashup. What do we mean by a mashup? We mean the blending of capabilities from many sources to provide a new and enriched experience. And then finally, at the end of this journey, basically we can see that banks can go one of two ways. They can either be able to consume services from various other sources, as in the second open modular banking, but in the third place, they're also able to offer really quite robust consumption of their own services, everything from KYC to credit cards or current account functions, the whole process. So think utility, but enabled through API capability, and think about that in terms of whether you yourself decide that you want to have a international payments department and all of the people in it, or you want to actually put the whole thing through TransferWise instead, because actually you'll still generate money and actually be more profitable for you than running your own in-house service. So whether the bank becomes a consumer of many other services or some other services and provides its own capabilities out to the wider community, that's what we're going to see a lot more of. And that's essentially where the open banking market is driving us. Okay, so what do we do and how do we do it? So in my experience, the experience of GFT, there are three main areas that we should consider when we're thinking, okay, open banking, what do we need to do? The first, and it's a lot deeper than it sounds, is culture. There are new ways of thinking, and I'm sure many of you will be able to cite friction in your own organizational structures between those who want to innovate and those who run core systems, for example. It's a classic problem that we've all seen and experienced. New ways of working. In order to generate the right open banking APIs, you're going to have collaboration between IT function and business function in a way that you probably haven't done before. What does that really mean? It means that when you're defining APIs as products, because that's essentially where we must think of APIs as we move forward, we're going to have business and IT in the room at the same time, collaborating fully in what these product definitions should be, how we're going to shape them, how we're going to position them, why are we doing it, how we do align to it. So culture is a really big issue, and I'll talk a bit more about that in a minute. I can't stress it enough, frankly. Getting the right mix of individuals in the room to make sure this works for you is an absolutely critical first step. On the technology side, there's a number of new issues for you on the technology side, and we'll talk a bit more about that in depth as well. But fundamentally, you're going to be creating new channels. You're going to be creating new infrastructures and ecosystems and potentially marketplaces for services. You're going to be creating developer portals whereby third parties are able to consume your APIs in sandboxes, test them, process them, and then roll them out into their own function as part of the relationship you have. You're going to potentially be monetizing some of those APIs, for example, providing current account hosted services or KYC services or pure data services, potentially anonymized data services, or third-party merchant services, et cetera, et cetera. So your technology stack is going to have to be really capable of ingesting very large amounts of data, both internally and real-time and from third parties. You're going to have to be thinking very much more about how do I analyze and drive insight from that much greater superset of data than I've previously had. And you're going to have to be thinking about what sort of new channels and functionality and capabilities am I investing in. So your gateway functions are going to have to be much greater capacity for real-time scale to help monitor and manage the drive to consume APIs that you are providing to the market. You probably will end up developing a developer portal, and we see this again and again, which in many cases is greater and better in terms of a development environment than the development environment you provide for your own internal developers. So what then happens is developer portals become a de facto environment where you create a private space for your internal development to start developing solutions as well. So technology is a really interesting area, and of course it underpins a lot of this. So the cloud, AI, ML, portal technology, gateway technology, discussions which sound as trivial as do I write my APIs with the RAML or Swagger? Clearly, the main issue here is ensuring that you write your APIs in a way that are not too technical. So on that basis, and I always get this the wrong way around, I believe RAML is better for that, but I'm happy to be stand corrected. But the point is, you have to make decisions about lots of different areas of a technology, and many of the areas I'm sure you're all investing in already find their way into this process of open banking, and it actually becomes a lightning rod for your organization in terms of cranking out new programs. And many of the disparate programs of work you're working on around AI, ML will all feed in to this process. And last but not least is the monetization aspect. One of the major headaches for everybody is, of course, how do I make money? Now, I've got a couple of points on this. Some of them also will be a little bit new for us. So once upon a time, I remember great consternation when Wells Fargo introduced a measure to its branch network a few years ago now, many years ago now, in fact, where they started measuring sales per square foot for their branches. Now, that was an amazingly strong departure from traditional KPIs. Now, one of the reasons we're here and talking about open banking and new banking, exponential banking, is that we're all acutely aware that there are other organizations out there, GAFA, notwithstanding Facebook's current difficulties, that are very, very good at managing large amounts of data and delivering a product and an experience to the customer as they expect it, as they want it, in a timely fashion. And that's a threat we all feel in financial services. The fact is that one of the things we need to embrace from these organizations, the Googles, Amazons, Facebooks, Apples, etc., is what they measure as a term of success. So I can tell you right now, Amazon Alexa, its prime measure for content on the Alexa voice-activated environment isn't revenue, it's stickiness. And what do we mean by that? It means how often does a consumer do that thing with them? So they want experiences that customers repeat again and again and again. One of Google's key KPIs is data, just sheer volumes of data. And I think we need to start thinking a little bit more about those aspects. I can think of a bank, a new bank that's been created in Germany in partnership with a company called Fidor. It's a white label, which is with Telefonica, which is O2. So O2 is a mobile operator. They have 42 million customers who are mobile customers, and they've introduced financial services and banking into that mobile environment using a third party as a white label through API capability, etc. And a reasonably short implementation cycle to get there, and they're expanding the product set. If you speak to O2, Telefonica, why do they do that? It's not primarily the revenue, although of course that's nice. Their primary reason for introducing financial services to their mobile customers was to build greater retention and stickiness for those 42 million customers. Because they know the more, and we all know this, from the more products customers have with us, historically, the more likely they are to stay. Now, historically, from a banking perspective, that was the current account, the savings account, the credit card, and the mortgage. Now, customer experience and open banking and use cases for data mean that we have to be much broader because the customer expectation of the experience is getting much broader. So monetization is interesting, and I'll tell you straight away that in all open banking programs I've been privileged to be engaged with, that the early payoffs have come from internal efficiencies. That shouldn't surprise us, I think. And that where we are now is the regulatory step, and a lot of energy and thought is going into these, if you will, open banking 2.0. I don't really like that phrase, but the next phase of open banking in terms of new revenue streams. The selling of data from banks, there is a revenue stream there. It is not necessarily the greatest. There are only so many asset managers in the world that you can sell data to. And frankly, it's a big bank game in every sense of the word, because you need to have data that's statistically relevant to be attractive to sell that sort of anonymized information to third parties anyway. So a bit more details on the culture side. So the collaboration step is super important. So we need to be thinking much more in terms of agile pod development teams helping develop the API strategy and the open banking strategy. You need to think about agile DevOps organizational structures. You need to think about MVPs and spikes. So if you're not familiar with those terms, I mean, MVP, obviously minimal viable product, is historically and quite wrongly, MVPs have been defined by many as some sort of wireframe, looks fantastic solution that you can never implement because it's been built by a bunch of really clever designers from the usual suspect consultancy relationships, but it's had very little real understanding of the engineering required to make that idea actually implementable across a business. MVP should really be looking at components of enablement. So an example I'll give you is, for example, let's think about personal financial management. In personal financial management, we'll need to have an engine from a PFM or developed in-house, primarily I think from a third party, which is doing all the data enrichment. That data enrichment, in the conjunction of an open banking environment and in conjunction of an environment where open APIs are allowing you to also drive aggregation, you're going to have to consider how you do real-time experiences there. So you've got to build that in. So again, the culture here, it sounds a bit technical. It's not really technical. It's just that BAs and solution architects are now engineers and designers as much as they are the older traditional formats that we had. Secondly, and I'm sure you all know this already, but it can never, it's never a problem to keep restating it for us all, because we really do need to think about it. The most successful things we're seeing through open banking are very much focused on what the customer wants. And the underpinning of that is, of course, APIs, but being really clear about customer requirements is a fundamental part of the new culture thinking, and it very much flows in the open banking space. I'm sure many of you are already well on the way with that. I know from research and engagement, I've seen a lot of that. Last but not least, and I don't mean this in any way disrespectfully to any bankers on this call, but you know, I've worked in banks myself as well as being a consultant. I think banks lost that entrepreneurial DNA somewhere along the way, and I think we have to find it again. And I think one of the reasons why fintechs have been so attractive to work with is that they are demonstrating that entrepreneurial spirit that banks need to reclaim. And I think that's an important third part of the culture. That cuts across all of the inherited risk-based decisioning that banks have quite rightly evolved over many years. But we are going to have to reinvent our culture to the extent that we create not only the collaboration environment, but genuinely are pushing the entrepreneurial boundaries of who we are. We need to be looking at Alibaba from China. And if you haven't seen their latest video, please take the note to go on YouTube and search for a video called New Retail. That's New Retail. It's a 5-minute video, but if ever there was an example of how technology and bricks and mortar and the real world collaborate, that video is brilliantly encapsulating that. And I would encourage you all to watch it, just because it's actually a great piece of insight, an empowering insight at that for all of us. Because, you know, branches are not disappearing. They will still be a physical presence. There's still clearly demonstrably need for these things. So culturally, let's get our entrepreneurial DNA back. We can get that to an extent by working with fintechs, but in truth, we need to be making sure that we as an organization can drive that entrepreneurial spirit ourselves and finding the right partners with the right agility to do these things quickly. Because this change is not the good old-fashioned pyramid transformation programs of the past. We are truly talking about agile consulting, agile partnering, agile development, in a way that means we work in sprints, we work in cycles, and we are generally doing all of the things most of you have heard many times before already about failing fast. But this is a very important aspect. If we're going to really reap the rewards of an opening up of the banking capability, you've got to make sure that you have an entrepreneurial capability within your bank to actually realize those benefits. Being a fast follower is less and less a place that you can retain a position, and ultimately you end up being very much more defensive. And I think defensive is fine, but I think, you know, creating those new experiences with customers is interesting. One thing I would say on culture is, when we've looked at open banking in the UK, and we've now got access to the open APIs, what's happened on these open APIs for transaction information? Every single bank is already integrating aggregation services using the APIs into their customer experience. So we've gone from a piece of innovation that 2-3 years ago had questions about how do we consume this information, how do I download this information, can I use screen scraping? That's probably illegal, it'll go against terms, it's at customer's own risk. We've now got that into a state where pretty much every bank that I've engaged with is developing a Me Too response to that first set of APIs. So again, that just pushes us down the route of, well, the entrepreneurial experience, the depth and the breadth of the customer engagement. Next on the list, technology. So it sounds obvious, but open banking is going to require you to develop experiences where those organizations that you're working with have a place to go to consume your APIs. So now you've got a new channel entirely tailored around third-party developers consuming APIs, something that banks haven't had to think about before. So you've got a new channel, you've got a new customer segment. You'll have businesses that will engage with you, but I guarantee if your developer community that has access to your APIs doesn't like the environment you've created for them, and there's an alternative, any of us who have the privilege and pleasure of working with developers know they always go where they find it easiest and meets their requirements. So first thing on technology is your shop window to these services is going to have to be pretty damn good. SDKs, sandboxes, be able to spin up real-time testing environments, all of the things that actually probably most of us would only dream of for our own IT organizations not so long ago. We need to have those now in the developer portal environments for third parties to consume these services. We also need to know how portals operate. So the portals are going to be quite interesting in themselves. What is the role of the gateway? CA7, MuleSoft, Apogee. Why do I select a gateway? Or do I need to upgrade my gateway? What's its function? What's its role? How am I going to use it to drive the monetization, recording, choking off access from certain third parties, et cetera, So portals actually have an underpinning of technology, and gateway is obviously a prime component of that to enable open banking at scale. And of course, very, very quickly, any bank worth its salt will find that the demands of compute power and real-time ingestion processing will mean that you're very, very quickly embracing more and more of the cloud capabilities to allow you to have real-time compute power, but also to allow you to have access to data and be able to drive that data through real-time insights and experiences for the customer. So the cloud migration that we've all been thinking about, are we just porting, containerizing applications and putting them on the cloud? Well, you can do, but actually what you're going to find is you're going to be doing that and at the same time running a never-ending service of self-service data and self-service cloud function for all of your business lines to start consuming those services for you as an organization. So open banking isn't just regulatory compliance, as I hope you're getting a sense of, but to really embrace it and to embrace your own organization ability to compete. You're going to be thinking a lot more about how do I do this, and I have a slide at the end which sort of sets out an approach to moving this forward. I'm conscious of time, so I will pick up the pace a little bit. In terms of monetization, think about this in three ways. Think about the internal value. So for those of you who aren't really embracing open banking yet but want to, your business cases should talk about internal value, particularly how you're going to streamline and improve efficiency for developers. You're going to reduce lag for integration, all that kind of good stuff. So there's an internal value, and it's non-trivial in most banks' cases. Obviously, the enablers there around Open API, API governance, API factory, getting all that stuff in place well, probably finding a partner who's been there through that experience, such as GFT, to help set that stuff up, but you're going to have to do that and do it quite quickly. Secondly, think about the partnership value. The lowest hanging fruit, of course, is engaging with third parties, probably through marketplaces of some description, to leverage your product sales in a wider customer experience. And the last is what we'd call utility value, which is breaking up your bank functions in such a way as all sorts of different elements of your bank's capabilities are exposable and therefore consumable by third parties. For example, running in the current account. Now, last but not least, on this, mobilization, a template approach. So when we're thinking about how do we do this, what are we doing in terms of Open API? Well, the first thing is to kind of, we're focusing on MVPs and spikes. You'll get your API governance and architecture rolling. You'll embrace the API you already have. That's then going to lead to development of initial portal capabilities, which will obviously over time mature. That's going to lead to new ways of managing your data. So you have self-service data and you have data efficiencies. You're going to be generating lots of new data, which you can put to good use around customer experience, product affordability, etc., etc. And of course, you'll be embracing cloud functionality, which will give you the compute power to scale as you exponentially grow the amount of function that you are having to provide to the market. Today we're dealing with mobile phones as our primary channel. Think about what was going to be for us when our fridge freezers are actually asking for a loan to buy something, like a service or an insurance product. Think about how it's going to be when our white goods are ordering things, or our car is checking itself in for a service and you have to pay for it. Think about what that's going to do to your infrastructure and your ability to cope. So we're not that far away. This is not science fiction. This is a fact. It's just a question of the timeline. I don't have a crystal ball, but certainly within the next 2 to 3 years, we're going to see a major shift. Okay? So that really is, from my point of view, where I would like to kind of conclude and throw open for any questions, if anybody has any questions. In particular, I would talk about this in terms of mobilization is key. Where do you start? The reality is, frankly speaking, if you're not already embracing, get the API governance and the API model, focus on the internal wrapping of your infrastructure, lead in certain ways how you can do that. And I would push your API strategy and your API as a product strategy now, because it will pay you many dividends. So however much you wish to embrace the opportunities of open banking, the dividends for you in terms of flexibility and agility are very much non-trivial. And it will help support the fundamental transformation of how our new business is going to be operating. Secondly, and this is obvious, I know, but it doesn't hurt to repeat again, executive sponsorship at the highest possible level to have everybody dancing to the same tune. You need to be able to manage across the organization. You need to get much greater breaking of silos. You will need to make sure that there is a single purpose and view which transcends existing silos, which probably today have an innovation component with this people doing innovation. There'll be product owners, then there'll be infrastructure owners, cloud, and you need to get all that coordinated. And you won't get that coordinated without obviously the right executive sponsorship. So break down those banking silos. And last but not least, there are actually not very many examples of fully completed implementations. BBVA in Spain is a good example of a bank that's very far ahead. Fidor is another banking platform that shows what banking as a platform can look like as they consume third-party financial services, but they provide their own customer management and orchestration layer and order and customer ordering layer in between third-party systems of record and the customer through their mobile channels. So what we can take from that lack of lots and lots of experience, because there isn't lots and lots, there are only a few banks that have really embraced this, and we're seeing it in North America. We're definitely seeing it becoming an emerging theme across most of Europe, outside of regulatory as well as being regulatory compliant, and I know we're seeing it in Latin America too. I was on a call only yesterday with one of our cloud partners, Amazon, and some discussing the opportunities of open banking and how they will be helping facilitate some open banking initiatives that we are involved with in that market. So I would say, in summary, you don't need to be looking too far for good examples. You do know how to start this. It's getting the open APIs correct, having the definitions correct, and it's about getting that culture correct. That's where you need to start. And I think, GFT, my colleagues in Brazil, myself and others, are obviously happy to assist you if and when we can. And I now throw this over to any questions if there are any. So I've had one question, and the question is, where are the major challenges around kicking off an open banking agenda within an organization? It's a very good question. Obviously, every bank is different in terms of its makeup, its politics, etc. But I think the biggest challenge probably isn't in the ideas. The biggest challenge is where you execute and how you execute. And honestly, getting started, and I say getting started with the API strategy, will pay you huge dividends. Okay, next question from Flavio. Latin American bank, how do you see banks preparing for banking? Do you have any information about Brazilian banks? So obviously we are working with some Brazilian banks. I'm not going to name names. I think some banks are thinking about this and are investing in first steps. So I know that banking in Brazil is not just sitting on its hands and waiting. I'm not exactly bringing information that is like a clap of thunder. I know that some banks are already engaged. What I would say is that obviously at the moment I know that the regulatory environment isn't forcing banks down this route, and I also know that where there may be greater engagement will be around looking at credit-orientated fintechs to help drive that part of the market in terms of competitiveness. I would say to you, though, when we talk, there aren't that many examples. That's true, but there are some examples, and the examples of organizations that have stolen a march and are ahead fundamentally is the likes of BBVA, because they did not wait for a regulatory trigger. They did not wait. They embraced those initial steps by having governance, by having global standards, by improving the definition of the API so they are truly product orientated, and by investing in the right gateway technology and also the right infrastructure technology, they've been able to accelerate out of the gate when others are having to start that journey much earlier. So if you think about a lot of the things we've talked about today, compute power, cloud capabilities, AI, ML capabilities, I'm sure they're all topics that you discuss. However, you're looking for, probably within most banks, are looking for lighthouse programs. That's programs that can show the way, and they probably exist even today without a regulatory requirement around kind of a financial wellness or around other forms of PFM. Tend to be good areas where you can start thinking about this, as well as just cracking on with the open APIs and starting to think about, if you expose APIs to your bank, what's your portal going to look like? Okay, so that's one question. Okay, hello. I've got to read. So considering specific regulations we have here in Brazil, best place to start this conversation inside our local customers, both in IT and CXO levels. Well, it's a good question. My view is it depends on the customer. We all know those customers who will only embrace change when the business case is clear to them. And I think, open banking components, if you break it down and understand that the fundamental part of open banking is having the open API piece done well, you can start building business cases for the internal value. As I said about monetization, there is an internal return on value. We know of organizations that by introducing open API within their development environment for retail, etc., they have significantly improved their time to market. So that's an example. The other example, of course, is to just bring those customers up close to the most innovative examples that we see out there in the market. Show them the likes of Divido. Take them to markets where open banking is already current, and see what's actually happening. It's true to say that open banking in the UK has not exploded onto the scene. That's not a surprise, because a very small number of third parties have access to the APIs. This is a question of time. I think you can also identify those projects like cloud and infrastructure projects, like some of these major investments in customer CX, where you could potentially, as I said in my mobilization image at the end there, you can start to see how you can build a lighthouse that crosses them and connects them together. So for me, the Open API program is key. Credentialization and use case is key. It is the case that and we say about them a lot, and I know we do, but the likes of BBVA and Fidor have really done great in terms of moving ahead quickly. There are others who are moving very quickly to catch up, both in the Spanish market and also in other markets. In the UK, the UK market has gone from no open APIs to full regulatory compliance as of 13th of January. They just got to add in a few more elements to be compliant with all the EU open banking requirements that are coming out later in the year. And we're seeing business models that already require and consume open APIs. So I guess inertia or showing why this is important and not getting tied down in it's just a regulatory compliance thing, because it isn't. Because it will be connected to all the investment decisions you make, because of the need for compute power, because of the need for real-time data ingestion, because of the need for insight delivery and engagement across different customer use cases. So that will be my answer. I hope I helped a bit. I think I hope so anyway. I don't know. Are there any more questions open? Okay, so without further ado, I will say thank you all for your participation. I do hope it was useful. I look forward to for having the feedback, and I look forward to hopefully engaging with you all more in the future as we explore these opportunities together. Thank you all very much. Goodbye.